Hey Scott. Hey Andy.
Hey, Steve, and hey, Scott. How y'all doing?
Yeah, the program today is the trade of the week with a lot of other little content sprinkled in there as needed. So, yeah, let's get started. Thanks for showing up, everybody. This is the regular Tuesday webinar, Trade of the Week, hosted by myself. If you don't know who I am, my name is Steve Gomez. I'm user number 3 in the Trade Ideas system. So what that basically means is the CTO, Phil, and Dan, the CEO, came to me first and said, Steve, will you help us test this? So that's kind of my claim to fame. That's how far back I go with Trade Ideas. User number 3, Andy himself is user number 40. So the two of us have been around this technology for a very long time, and we're very excited. We're coming off the heels of another wonderful month and some really cool features that'll be coming out shortly, not to mention the stuff that's already come out. But let's get started. Disclaimer, the old disclaimer, just please don't misconstrue this basically as investment advice. That's the bottom line. We're not here giving investment advice. We are talking about software, technology, and maybe some opinions in the market. So nothing you see or hear in here should be construed as investment advice. You got to seek out the registered investment advisors and the series holding brokers that are able to do that for you because they took all the fiduciary responsibility type questions. So disclaimer out of the way, the most popular slide, which will never change, you're not alone with Trade Ideas. We really pride ourselves on onboarding and being a great concierge to the people who sign up. Some of the ways in which we do that are on this slide. Mainly the live trading room with Barry Anderson, who does a wonderful, unique job at managing and moderating a big room, trading his own account, and helping people with the technology of Trade Ideas. It's a wonderful place to hang out during the day. There's a lot of good traders in there as well that will help point you in the right direction as to what's on the move, in addition to our software pointing you in the right direction. What is not on this slide is the free 1-hour support session that you get when you sign up with Trade Ideas for a minimum of 1 month. So think about this. Scott's going to give you a promo code at the end. People who want to come back and spend an hour and do another hour after they've done their free hour, they pay $99. So it truly is a $99 value to spend an hour with us and really get to know the program and let us help you dial it in to the direction you want to take it. Very, very invaluable service. A 1-hour free one-on-one session with us, but you gotta subscribe for at least 1 month to get that. So that is another big deal in our pride of bringing people into the fold and onboarding them and getting them up to speed, because we do recognize that we're working with a very intense product here, 14, 15 years of technology to be exact. And then finally, what you see listed, the Monday through Friday webinar support. Yesterday was Jamie and myself riding shotgun. Today is myself doing the trade of the week, which we will talk about in context. Tomorrow is the question and answer and demo, typically where Dan and Brad will start to show you and tease you with stuff coming down the pike and answering questions about the program. Trading Studio is Thursdays. That's Andy's gig, and he has some help with Jamie as well on Thursdays. And then Friday, we're probably on our 4th or 5th month now of a great way for people who maybe have not had their one-on-one session yet or need some additional understanding and need the visual support to help. But we have what's called a Friday support session from 11 to 2 Eastern, and it's the same format you guys are dealing with right now. It's just a go-to webinar, questions panel, share our screen, and come one, come all. You don't even have to be a subscriber of Trade Ideas. You can just come and ask some questions if you'd like. But all of these things together are really one of the reasons that we have had subscriber growth, just in a parabolic nature, especially starting back 2 years ago when the AI Holly was introduced. So the reason I always keep this slide in here is to just kind of go hand in hand with the way in which people are adopting and enjoying and sticking around on our product. We're very grateful for that. Quickly, before we go into today's content, Brokerage Plus is something we've been talking a lot about, and this is for advanced users. So newer users that have only been trading a month or two, this is not for you, as I shake my head. You have got to learn to crawl, sit, walk, And then this is where you start to get to running. This is basically attaching the trade ideas, alerts, and scans and automating them with interactive brokers. And so there's a few people doing this, and it's probably the future of trading for a lot of people. We, however, are still got it in beta, working out some of the kinks. But once it does come out of beta, it'll be a one-time licensing fee for those that are interested in turning your trade ideas scans and turning your market, turning your back, so to speak, to the market. Like some people, want to live the dream and actually do that. And this is the tool, the beginnings of the tool that will allow people to do that. But again, trade-ideas.com download, or info@trade-ideas.com, the email. We can send you some preliminary stuff about the Brokerage Plus, but please, it's not for somebody who's new. You really need to figure out the markets. You need to figure out your method and how you fit and what your risk management profiles are with trading and the markets, and also, learn the product as well. So for those of you that are curious about it, you can get some more information on Brokerage Plus. That's the name of this particular product. And here we go. No man is better than a machine. Okay, I'll buy that. But no machine is better than a man with a machine. And that's what we pride ourselves at Trade Ideas. Trade Ideas is the machine, and we are the human traders, adding the human touch. So there's a lot of discretionary give and take, cyborg, if you will. Let's just get right into it. The agenda for today, November 28th. Again, thanks for showing up. I see people continually filing in. They're learning the drill that the first 5 minutes are disclaimers, and then we start to get to the meat. Anyway, I'll go over the market recap, and if Andy has anything to chime in, he's always welcome. We'll take a look at Holly Recap, the AI today, and the history function. For those that are not aware, I'm going to remind you of the new history function, which I believe is in the new version. We'll have to double check on that. Trade of the week is Spirit Airlines, SAVE is the ticker symbol, and we will go back and talk about the genesis of finding and curating some stocks and what we came up with, and I'll show you actually the tool, the scan that helped find this. Range versus position in range filters. I think there might have been some confusion on that, including myself. Last week I built a new scan where I showed people how to stack those moving averages, get the 8 above the 20 and get the 20 above the 50. And I had told you it was a rough draft and it's just still a work in progress. So I'm going to kind of catch you up on that. I made a couple of tweaks to it, but I want to really highlight those differences of those two filters because there's a very big difference, and they're both very, very good filters to understand. We'll take a look at the sector glance. The market once again rotating, handing the baton to the next sector ready to go, and time permitting, maybe 3 or 4 chart requests. Those are always fun to end on. So if you would, hold on to any chart requests you might have until we ask for it at the end of the session. All right. Let me just open up my questions box here to make sure. Hello, everybody. So let's get into it. The market recap. Let me close that and show you the market recap. I always like to start with the spiders. What a day. What a day, what a day. This is even with North Korea launching a missile midday. Market shook that off like it was nothing. Nothing's going to take this market down until the black swan flies. Don't ask me what the black swan is or when it's coming or what it's going to be, but at some point you'll hear the term black swan because nothing is seeming to affect this market as we look at it here. I'm just trying to line up my long-term trend line, which I speak about just about every week. Spoke about it yesterday, and here we go. We're going even farther away from the trend line. I had said this market could use a monkey bath or some sort of a shower, just at least a nice pullback and then dig back in onto the trend lines and maybe reset a lot of charts. But no, there really is not a pullback. Not even North Korea flying missiles today could pull this thing back. We ended up on highs on the spiders. So without a doubt, there's nothing to be bearish about here. I mean, we are extended way above probably some standard deviations, and we could use a little bit of a correction, but the market doesn't care. And let me just throw this out there at you. I mean, typically tops are not put in by a pattern like these right here, and then all of a sudden, we just roll over and start selling off like crazy. No, tops and bottoms are kind of similar. The March 9th low back in 2009 or 8, I can't recall, was basically a panic and a capitulation. Well, we can also have panics and capitulations to the upside too. They're just more of the greed type. Get me in at all costs. The shorts are covering for the last time at all costs. So don't be surprised if and when, a week, a month, a year, I don't know. But this market, I think, when it does decide to make its turn, it's going to do so in a kind of a blaze of glory and a crescendo of a big up move and then possibly an intraday reversal. Andy and I have talked about that a lot, and we were even talking about it again today, that's probably going to be the market action that will eventually help, will eventually bring the price action back to earth. It's going to have to go through a euphoric period before it comes to its senses. All right, so that's the spiders, the most widely looked at. Spiders had a great day because of some of the components, which we'll go into here briefly in the sectors. But again, the path of least resistance, up. No red flags at all. Giant green bar. Great volume today. Look at this, SPY, almost a 2.0 on the relative volume. So not only did the spiders go to an all-time high today, basically did it with 2 times the volume to say, take that, bears. Take that, all you low volume people. We're going to highs on double volume. So let's switch over to the NASDAQ, which didn't quite have as much fanfare, but it had to recover a little bit. But once again, interesting, relative volume only 1.17. And we'll get to that probably because of the components. Technology didn't really participate today. So, we had a nice sell-off in the morning and then bounced right back. There's that candle I always talk about, kicking the ball right back into play. Almost another doji on the heels of a doji yesterday, on the heels of double dojis back here. So the Qs are as such. Now the diamonds, the Dow, I expect to look a little healthier because of the financials and the banks, which we will get to and talk about. But once again, path of least resistance is up. Nothing to fret about on this one. And look at this, the relative volume of 2.13. Once again, thumbing the noses at the bears saying, oh yeah, not only are we going to all-time highs here, but we're doing it on double volume. What do you think of that? Pretty impressive. Path of least resistance remains up. These indices are innocent until they are proven guilty. Even the IWM got a little hissy yesterday, pulled back into the range, but quickly came to its senses and bounced right off that upper end range with another high-end candle. 1.92 relative volume. So except for the NASDAQ and the tech sector, the other ones, the Russell 2000, the Dow, and the S&P 500, they had a wonderful day, and they did it thumbing the nose at the bears in 2 ways. 1, with volume, and 2, with that midday shenanigans that Kim Jong-il, Baby Huey, whatever his name is, decided to launch some ICBM missiles. Which basically tells us, China does not have their ear and they are a completely rogue state. So I'm surprised we didn't pull back more. I mean, and if anything, the markets that climb the wall of worry, as they say, those are the strongest markets. And if you can look today here at, significant news where we tried to digest it for an hour and said, that's nothing, went back to all-time highs on volume. If that doesn't speak volumes about the strength of this market, I don't know what does. Andy, you want to add anything?
Yeah, man. What can you say? This market is just getting so extended, but it just keeps going higher. It's kind of reminds me of like, the hot air balloon, and the Russians like in 2005 just clobbered the record and flew at like 69,000, feet in the air. It's like this is what it feels like, man. This market is just it's incredible, man. I don't know how far it's going to go, but that's why
what do you think of my theory about when it does end, it ends in a crescendo to the upside?
Well, yeah.
It's just a theory.
My theory, well, yes, and historically, that's what you usually have. You have capitulation buying, which, interesting enough, there was volume today on the spiders and the diamonds. I wouldn't consider that capitulation buying.
Oh.
But I think since the advent of algorithms and high frequency trading and all the computers in the market, you can't base, even though human behavior always is a constant kind of, they repeat history. I think today you have so many computers and algorithms running the market. I don't think you're going to get that same type of
Kind of rewriting the books.
Reversal. I think it's going to end up being a wake up to a gap down, lock limit down, on some news. But that's just me, because market has a funny way of letting those people who try to pick a top and short the market. I think it's going to happen overnight. I think all the shorts going to wake up going, dang, and it's going to be a lot, a limit down. Who knows?
And buy the dippers will step in there at the first level of support, and they'll get run over.
And get clobbered. Yep.
Well, there's two scenarios for you, everybody. Okay. All right, so onward to Holly today. Boy, a couple things about Holly. Let's go to risk off here. Risk off, now remember, is the AI entering and closing positions, and that's the aggregate total. The histogram just looks like a bloody piece of meat. I mean, it just didn't go anywhere today. And then it's been kind of the same old song, guys. Although it happened a little bit later today, the risk on means, well, what would happen if those entries that Holly called out stayed open till the end of the bell into the close? That's where all of the alpha and value and performance showed up again today. And it's kind of typical of this market. We get kind of a lazy gap up open, and we sell off, and we kind of close the gap, and then the buyers start to come in towards the second half of the day. And it really does show up on the histogram of the way Holly, and tries to interpret the market. The first slide I want to show you was, about an hour into the day here. This looks like over an hour into the day. I'm looking down, I'm like, okay, the market's up, albeit it was a gap up, and we've talked about Holly sometimes throws a monkey wrench in some of Holly's strategies when we gap up like that, because it may throw off some of the triggers. But nonetheless, what I noticed was, what the heck's going on here? We got one short, a downward dog. This thing at the moment in time, hour and a half after the open, was leading the way. So I thought that was really interesting. So there, right off the bat, there's a flag of bifurcation. Here's a flag that the AI really can't even see what's going on. We've got longs and shorts. The market's going to highs, but the short in Holly is working the best. So there was just a lot of noise going on for sure this morning in the Holly trades. But it's the market that we've had. It's the market that we continue to talk about. Risk on. Before I go into a couple of trades, which I found were interesting, just to try and highlight, some decent entries, I want to show you one more thing, just to try and buttress, what I'm really talking about here, the risk on versus the risk off. All right. So I'm only going back to July 1 of this year, 2017, risk off mode. The blue line's the S&P, just kind of doing its thing. And the green line is Holly showing us the casino odds always win in the end. Well, that's risk off. Risk off was at 44 points since July. S&P was at 18. All right, well, just to kind of drive home what I'm talking about, the risk on has been the way to go for the last few months. We'll just let that calculate here. It's chewing through a lot of data, but any second we're going to get a updated chart of what the risk on looks like compared to the S&P. Well, there's the S&P up 18 points, same thing. Risk on is almost double the performance of risk off, 75. So just, this is proprietary information. It's not, to be spread around, but I wanted you guys to visually see that and what I'm talking about. The first half of the day is choppy, gap fill, and then the buyers seem to step in. And therefore, some of these trades that Holly calls out in the morning, they might get, TJX is a perfect example here. This was a reduced risk. The AI exited the trade because of reduced risk for a 5-cent loser. What did that mean? Let's take a look. Here's the arrow of the entry, and we went positive, we went negative, we went positive, we went and finally the AI said, this thing is just going sideways. I'm going to use my risk management that I was programmed to have discretion to use and close this trade, TJ Maxx, for a 5-cent loser. But again, as the day goes on and sectors start to show up, retail had a wonderful day. Retail exploded into the final hours. Now, I'm not saying in hindsight you should be doing this or doing that. I'm just trying to kind of show you where the entries are and why Holly got out of this one and why this one might not have been a bad idea to keep an eye on, at least for the rest of the day. Buyers stepping in. This was my favorite trade.
Can I add something to that one? Not only that, look at that daily. I mean, look at the daily right where she entered that trade. I mean, you're breaking out of a range there. And I want to add something to this, guys, because there's a lot of people that come in with the scalper mentality, a short time frame. They're going to jump in something, hold it for 5 or 10 minutes. if you really can get to the point, where you're sitting through the 10 and 15 cent noise and learn to hold stocks. I know it's tough to do, trust me, because I was, been a professional trader for 20 years. But that is where, and I said this over and over in the webinars. It's where the real money's made. Okay, it's not in the micro scalping. It's not in the jumping and getting 20, 25 cents. It's being able to sit through the short term wiggles and jiggles of the stop. And even if you have to cut back your size in learning to hold stocks longer, trust me, it's going to keep you from churning commissions, and profits are going to be greater. Just wanted to throw that out.
Sure. Well, I'm glad he jumped in there to remind me to show you all what was happening here. 1, 2, 3, 4, 5, 6. Nice little tight little 5-day range here. Interesting. And we're going to kind of dovetail this into the alert that I've been building later. A lot of the alerts start off looking kind of like this. But yes, nonetheless, this is what we always say. Look left. Where's the resistance? There really wasn't much as it broke out of a nice multi-day range there on that one. The next one is I went to buyers stepping in. There's two things I love about this. Okay, one, the entry. Let's just start with the entry. It's not buying a breakout, and we said it many times. We love the quarterback. We love the pullback. We love the buyer stepping in, strong stock pulling back. This was a beautiful entry, and this is where we really feel the value of the AI comes into play. This particular spot was not chosen by a coin flip by the AI. This was after over 1 million back tests last night on different strategies, trying to find out where the scatter plots and where the data points lie, things that we don't look at or understand. And these levels of probability start to show up. And so it was a pretty decent entry. And I might add, you got time to get into it. The entry was 12.35, and as you can see, it pulled back down to 12.27. Plenty of time to get into this trade. That's the first thing I love about that. The second thing I love about this is what Andy brought to my attention. Look left. Well, I tried to zoom out and I can't. This is a rather new issue. But oh my gosh, 1, 2, 3, 4, 5, 6 extremely narrow range doji days that this thing was breaking out of. That's about as textbook, as calendar boy, calendar girl, whatever you want to call it, as it gets, breaking out of a tight range like that, especially for a new issue where there's not much data points in the history to really determine where the resistance and the supports are. So two things I loved about this trade was the entry using a pullback off of highs, and the daily chart was already breaking out of this very tight range. Not surprised that this thing did well and actually went into the bell and closed well as the markets gained steam going into the end of the day. So those were just a couple quick examples that I wanted to talk about. The theme seems to be lately, there's a lot of noise in the morning, but the afternoon, the bulls seem to kind of shape things up. And if you're keeping a close eye on certain things that are called that you liked during the day, well, then there's no reason you can't keep an eye on them throughout the day, because the value of Holly really is the entire day. One last one here, that one short that I showed you early on actually went on to do something okay. So kind of interesting that Holly kept, that short position didn't turn and bounce with the market. It was actually weak for a reason. Obviously, there was news or something going on there. Anyway, okay.
One other one, Steve, I liked too, was a great trade, was that SOL, a little China solar play.
SOL, yes.
That was a great little entry there.
There we go, right there. I'll tell you what, guys, if this thing right here was looking like this on a Friday going into the weekend, we'd be talking, possible trade of the week type of setup there. But beautiful, beautiful breakthrough. The entry was above all of the congestion. Thank you for reminding me of that one as well. So that one was an 18-cent trade risk off when Holly got out, but if you took it into the end of the day, and if you still possibly have some, I can't really think of a reason to not have some. You can always sell half and let the other half go. Closed up 28 cents. All right. Can you view the target price on the chart, or is it too high to appear? You know what? It's a great question. Let's take a look at this. Let's work backwards, Jeffrey. The target price is not even on the chart. So let's look backwards. What was the strategy on Sol? Strategy on Sol's wake-up call. Let's go to our parent window. Wake-up call. Where's our data points? Stop time, 60 minutes. Stop loss, 20 cents. Profit target was $1. So we actually had to zoom out just a little bit on that daily chart, and you'll see it right up there at $1. Sometimes, for instance, little big guy doesn't have a profit target. It's welcome to run all day long if it wants to. Additionally, quarterback also does not seem to have a profit target. So when we get into those types of trades, you'll just see a green line going into infinity, you know, kind of like the Freedom Towers in New York City. There was another question I thought before I moved on, because I don't want to have to come back. Yeah, you just needed to zoom out on the daily. Jeffrey would have been the deal. Yeah, getting stuff. I think he was talking more about your sizing conversations, Andy. I agree with your size statement. I'm in my second year of trading, and my biggest problem was getting stopped out and then having the stock go up while I watched. Now, usually 1 to 300 on stocks, share size. I read that I should go up. I am able to hold much longer. Love your training. One thing I want to add to that, John, you're correct. Great job. Glad to hear that. Downsizing makes it a lot easier. Mm-hmm. Also, be very wary of that first 15 minutes of the day. That is where all of the volatility and the stop runs and the insanity occurs. Again, it's worth reminding, Andy and I used to run a mirrored account where we had numerous people that had the account attached to our account. And we'd be in a position where we're like, oh boy, I'm really, really fearful of this XYZ's open. I'm afraid they're going to try and run the stops. And Andy would say, pull the stops. And I'd say, are you freaking crazy? He'd say, pull the stops. And I started to realize the wisdom in that. Yeah, more often than not, we were able to withstand silly, stupid action that would dip down into that area and then pop right back up. So, you know, pulling stops, good till canceled stops, that takes away the food and takes away the chum that these predatory algorithms feed on the first 15 minutes. So if you take away their food, they can't get you. So great comment, John. I agree with everything you're saying. Downsizing helps. And just be aware of that first 15 minutes of the day. It's the hardest part of the day. Quickly, I don't want to get too hung up on questions, but I'll answer this last one here. Prefer options. How does your Holly help me? Holly is just going to show you a good setup. If you like it, you can look into the options market and, you know, buy it on the options. You know, if you think it's a setup that you like. The only thing I can say to that is, you know as well as I do, when you go options, your downside's limited. And so if you have a good knowledge of the options and how they work, it can give yourself a nice peace of mind to go back and say, yeah, I really like that AQ. There's probably no options on this thing. It's a new issue. But, you know, on a chart like that, you know, maybe I'll go ahead and look for some more, and I'll just down and limit my downside by the amount of contracts I buy. It really is up to you. So to answer your question, Holly is not geared to flash alerts. Hey, option buy, option call, option sell. You know, it's basically this stock is doing something on a statistical plot graph that you guys don't look at, that I do, speaking in the voice of Holly. And I see high probabilities at this level. That's it. You're on your own after that. The value is in the entrance, not so much the exit. The exit is much more on the discretion, as I harken back to man and machine. You know, Holly got out for a real early exit on this one, but when the human comes in and looks at this and says, well, you know what, AI, I'll take it from here. This is a nice breakout. I'm gonna go ahead and maybe sell half on the close and let the other half ride. So human and machine coming together to make it work. All right. Okay, the system is just for US stocks. You guys are getting bold with your questions in the middle of the webinar. It's just for U.S. stocks, no Forex. We have a couple of Canadian markets, but for right now, U.S. equities only. All right, so that is that for Holly. Let me clean that up, and I think we're going to go to the trade of the week. By the way, how's Bitcoin doing? And it's getting there, 9,974. I expect Bitcoin to hit 10,000, and then I expect the biggest Fibonacci pullback of 30% or so. We'll see. This tab. There we go. We'll get to that in a second. Okay, trade of the week. Perfect. So let me bring up the alert that Andy created. It's called Let's Go Fishing. And the theory behind it is kind of a hybrid between the trend change lubricant and, well, I don't know what the other hybrid would be, but it's kind of a taking stocks like the trend change lubricant, but instead of trying to exploit the short float for a possible short squeeze, we're just relying on good old-fashioned fundamentals to do the job. Okay. You're not too late, David. You know there'll be a video on the YouTube channel tonight in a couple hours.
Yep.
But yeah, you've missed some really good stuff, let me tell you that. So this is all Andy, basically saying, let's take the trend change lubricant, and instead of the short squeeze being the catalyst, let's just make a good, sound, fundamental balance sheet be the catalyst, and maybe, just maybe, some of these big institutions will start to see that this thing's been beaten up and basing and turning in its trend and has good fundamentals. Let's take a shot. So new high is the alert, but this window-specific filters I wanted to show you. This is where SAVE, this is where Spirit Airlines, the trade of the week, was derived from last week in the history, which I'm not going to take the time to go into. Trust me, it was showing up on there early and often. Average daily volume, this is important, 500,000. The 500,000 level is designed to try and, get more professionals involved. A lot of the RIAs and professionals and money managers, they don't want to play with stocks that have a float of 10 million shares and the average daily volume is 200,000 shares. They want a little bit more meat that they can sink their clients' teeth into. So as we scroll down, here's where we start to get the interesting stuff. Price earnings ratio. Well, for whatever reason, Andy has a value in there maxed at 30. Position in your range. This is important because it's just like the trend change lubricant that I was referencing down here, same thing. The year is broken up into a percentile. The year low is a 0 and the 52-week high is a 100. So if we put a filter that maximizes 35%, we're saying we do not want to see any stocks that are more than 35% above their 52-week low. So therefore, we're going to get these broken downtrending type of charts. But then again, the idea here is we're looking for good fundamentals, good cash to debt ratio, earnings per share. Got to be making at least $1. Hell, if a stock's making $1 earnings per share and it's beating up down like that, maybe it's a good reason to buy.
Shot, huh?
And then position in 10-day range, same thing as the trend change.
Well, I think they use a 20-day in I think we use a 20, but in the trend change.
Oh, okay.
But that's okay. That's
the only same thing. And trust me, guys, we haven't gotten there yet, but we're going to touch on this filter. We've got a little bit more to say about that. So that's it in a nutshell. It's kind of the genesis of, once again, trying to find stocks that are beaten up on the daily chart, but have a reason to turn and move higher. And I know Andy told me there's a lot of interesting things.
A lot of retail coming through today. A lot of Bed Bath & Beyond. So
Nordstrom. Look at that. Nordstrom. Bed Bath & Beyond.
Bed Bath & Beyond. Want to keep an eye on. So good volume. So markets, getting away from everybody, and they're looking at some of the beaten up retailing. Yeah.
Thus the name. Let's go fishing. Right.
That's when we got saved.
Segue. So this is where the trade of the week was located, and let's put that up here now, save. So going into the weekend, I'm going to make this really big so you guys, it looks just like another trend change lubricant type chart. Man and machine, human and machine, woman and machine. Look left. It comes to us to say, okay, well, Trade Ideas showed me a stock with good fundamentals, showed me a stock that's in a downtrend, and it's showing me a stock that's basing and making new 10-day highs here. But it's still up to us to look left and say this was a nasty level right here of support and resistance. That's a pivot level definition for you right there, which was roughly about, 38.75, I think, as we got there. We can see it intraday. But going into the weekend, this is all we had. And we did put a trigger in there, and it did trigger yesterday, so the trade is in fact live. Let's go into the intraday. So yesterday, it triggered on the open, and then just kind of went nowhere. But today, it made a little bit of a new low and then never really looked back, and it bounced. Well, it came back through the trigger level, and I also drew that orange level in there from the prior daily chart, resistance, pivot level, support. And you'll notice it got through, and let me just bring up a couple of windows here. So here's window number 1. This was, okay, let's see, I think I want to make sure I got all the correct ones in the right order here. That's after that. And this one is the first one. Okay, so let me start with this one. This one, I believe, was yesterday. Let me just take a double check. I don't know if I can see. No, that was today. What am I talking about? Okay, I have a little, trust me, I've got a method here. So here was today. Yesterday, nothing, triggered right on the open, kissed it, and then just range bound. Today, no sellers below yesterday's low, and then we started to move higher. And as I like to do many times as we push back through these critical levels, I was looking at the volume. I'm like, well, you know what? Hey, Andy, look, Spirit Air is moving through, but the volume is just anemic. Relative volume was 0.58. 5-minute volume was barely above 100, 1 minute. So, this, it looks nice, nice green candle, but under the scenes, it just wasn't really happening. So what did it do? Well, it had to do something, and what it did was this. It put in that subsequent red candle. All right, so it had nowhere to go on the 5-minute volumes. Pulled back, hey, all of a sudden, this green line of resistance became a green line of support. That's exactly what we want to see. So the low volume kind of just brought the price to drift back down to our pivot point, and then the price action held, the sellers abated, and the buyers came back in. And then I highlight for you, the volumes actually started to kick back in, started to get confident again. Once I saw the initial push was low volume, the pullback held the pivot point as needed, and then the subsequent new high, decent volume. Same here later in the days we got towards the close, decent volume continuing into the close. And notice the relative volume was actually increasing. It was slowly going higher. I would have liked to have seen it hit at least 1.0 by the end of the day. But when we first started off early in the day, it was 0.58. So you can see how that relative volume value will increase or decrease during the day. And here's a much easier way to kind of look at what happened on, here was that first little pullback of volume, and then we did push through that major orange line of resistance, and it did exactly what we would expect it to. Again, back here on the daily chart, it was support right here, broke down, and then it became resistance. That's all you need to see to draw an orange line and call that orange line a major pivot level. What did the pivot level do today once we figured it out and broke through? Well, the price action did pull back to test it, and it tested it perfectly. It's exactly what we want to see. Prior resistance became future support. So all systems are go. Some good green lights on Spirit Air. And that was the reason for the selection. There was a couple other of similar type of charts, but these are typically the kind of charts we like to look for the trade of the week. Ones that have the ability to run for 3 or 4 months. If you've just got half a position or a quarter position left, those are the kind of the ones we like to start with.
Did you pull that back out, Steve? I want to show something. I love when stocks do this versus when they hold the low. So if you zoom out a little bit, I actually love when they, a little bit more, I want to see that 52-week low, how it broke through. See how it broke through that 52 low? I guarantee you that shook out so many longs right there, and then washed and repeat now. Now it's hopefully starting a move higher there. But yeah. I would rather see it break that low than to hold on to that low, because I know now some people got washed out on that long wick there.
Yeah. Good point. I think I did see that also when I was looking at it on another chart, and I liked the way it failed. That little wick down and back up. It was like, whoops, okay, that's enough of that. We better reverse course here. So yeah, great point. Yep. Let's see here. All right.
Position in range.
Position in range. Michael, there's no way to put bid and ask prices on the charts or level 2 info. You got to have a broker to have level 2 info. We have consolidated feed level 1 data, and our charts are pretty clear for a reason. We don't want to have too much stuff on there. We're trying to keep the stuff from Holly and the risk reward ratios that we look at every day around here. For instance, save right here, if you were to buy it at 39.14, it's showing you the suggested stop would be there at 38.75. and the suggested target would be here on the daily chart at 39.86 roughly. So no plans to do any of that. If you need level 2, it's a question you have to ask your broker for level 2. Okay, where were we? I know you told me where we were. Okay, so last week, guys, I started working on a new filter, and I'm going to pull that one up. I'm pulling both up. That was the first one I worked on. So let's grab that. This was called Tight Range with SMAs Stacked. The theory and the idea behind this original alert that I started working on last week was to try and find ways to look for stocks that have the moving averages stacked, as I call them, fanned out perfectly. The fast line, the 8 or the 10 should be above the 20. The 20 should be above the 50. The 50 should be above the 200. And if you can find those types of setups, typically it's not going to be, it's going to be a decent looking chart. And so I started thinking, well, we have those filters. Why not go for that? And then I took it one step further. And what I did was I also tried to define with our filters a range, the position and the range filter. There it is. Position and 20-day range. We had this on the Let's Go Fishing. Andy had a position in 10-day range at 98%. Well, this just means that over the last 20 days, the price is currently in the 90th percentile of that 20-day range back and forth. But notice we have another filter here called just 20-day range. So this is kind of what I wanted to really focus on today. There's a huge difference between these two filters. And mea culpa, I want to let you know that this is not what I was intending to do, actually. I'm not quite sure why I put a 30 in the minimum. So let's back up and try and explain what the difference is between the two. And for those that don't know, we have a wonderful documentation page that can satisfy that. So if we start 20-day range, so these are our day range, 5-day, 10-day range, and 20-day. Notice it doesn't say position in range. That's the operative difference, okay? So what this is doing is it's saying these filters are looking back at the trading range for the previous 5, 10, or 20 days, and they report the size of that range. So the size of that range over that time period becomes our envelope that we're going to sample. So for example, if the lowest price of that range during that sample period, 5, 10, or 20 days, was $10 and the highest was $14, well, then we have a range of $4. Well, I don't like to use filters in dollar amounts because a $5 stock is much different than a $105 stock. So as it says, you can also express this as a percent. Okay, by comparing it to the current price. All right, so what does that mean? So if using the example of $10 up to $14 over the course of what we're using 10 days, that would be like a 40% range, I would say. Okay, so that's pretty wide. And what I was looking for in my original thinking was something that was more of a tighter range. Remember, if we go back to what was the stock of the day here in Holly? AQ, yeah, looking for tighter ranges. So that's kind of where I was trying to go. But I wasn't necessarily accomplishing that with the way in which I had it set. So I'll go back and I'll show you the newer one that I have. But what I just wanted to take this time to explain the difference in the filter. So the range is just looking at the high and the low for 5, 10, or 20, and then giving a percent of it. So let's say that the range was between $10 and $11 over 10 days. Well, that's only a range of 10%. That's a pretty skinny range, and that's kind of the more of the stuff that I'm looking for. So hopefully that resonates. But if we scroll down a little bit, we can start to see the position in ranges. And this is the ones that we've been talking about, where we basically look at the time frame, we look at the low, we look at the high, and we assign the low a 0 and the high a 100. And if we say, I want my minimum to be 98 on a position in a 10-year range, well, that means that the current price, that's the operative word, the current price is positioned in that portion of the range. Not to be confused with what I was looking for as well, which was called range. And that's basically just defining the width of that range. So I had it set at 30 for the minimum, which doesn't make sense as I go back and think about it now. I want to see tight ranges. I don't want to see ranges that are above 30%. I would like to see something a little tighter. So version 2, load from cloud, tight range SMAs stacked, version 2, a little different. What did I do here? Well, the first thing I did was fix that anomaly of having a minimum value of 30 on my range. I don't want minimum 30% ranges. I want tighter ranges. So let's go back to where I was. Okay, there's my 8-day. My SMAs are stacked. Change from the close, relative volume, price. Position in 20-day range. Here we go. 90 percentile. So this again means the position, meaning current price, is positioned in a 20-day range in the 90th percentile. However, I want the last 20 days, and I might go back and experiment and change this to a 10-day range. I want the size of that range to be compressed. I want it to be small. Oh, look, and that's what I have, 10% as an example. So again, trying to find more of this kind of stuff right here, tight ranges, using that particular filter. And again, if you missed it, I am using a maximum value, 20 days. So what I'm saying is the last 20 days cannot have a range that varied more than 10% outside of its range. I want to see a tight range. And if I wanted to change that to a 10, I would just go right here, 10 range. There it is in percent. I'm going to add that filter. I'm going to put 10 there as well, and maybe I'll turn the other one off, and I just might experiment and go back and forth and look and see which ones I like, which ones I don't like. Turn that off. If we click OK, then we get a few different stocks. Now, once I have the top list arranged the way or configured the way I want it, the way in which I want to look at it is either two different things. I could sort by 20-day range and see which ones are the tightest. Look at this, 2.9% in TMK over the last 10 days. We're at 10 days now, so it's looking at that very tight range. All right, UNH also had a pretty tight range. We could sort by those, or we could sort by another way I like to look at it is how close are they to their 8-day moving average, FNFs. The theory is once the 8-period moving average starts to come up from underneath it, it starts to kind of force the issue and help the stock move higher. Regardless of how I'm sorting it here, guys, what you're seeing is a lot of healthy stocks and uptrends. Look at that. That thing broke out today. That are set up for us to come in and create our price alerts or create our markups or whatever we want. But it's a good starting point for stocks that are in an uptrend. The moving averages are all fanned out and they're coming out of a nice tight 10-day range. And that is the new version. I actually think I like 10 as we just did it right here. So I'm going to keep that as such. I'm going to go ahead and save that to cloud. So if anybody wants this, I'll go ahead and save it and share it right now. You can play around with it as well. It's, again, as I mentioned last week, this was a rough draft. This was a work in progress. And this basically is the progress coming across on that. All right, so let me just quickly save and share. I call your attention to the GoToWebinar floating toolbar and expand the chat window, hitting the triangle. And this is, I'll just call it version 2, stacked SMAs. And there's the cloud. All right, so for those of you that are subscribers, you now have that in your library after a couple of steps. For those that are not subscribers, look at how easy that was for the subscribers. You just go ahead and grab something and put it in their wheelhouse as well. Very, very cool feature to be able to save and share these settings. Did you want to add anything?
No, I love it. That's I love that top list, and I see some other people love it too and asking for it.
Yeah, so it's in there, and I ask you if you have for an opinion, and then I cut you off. I'm such an ass.
No, that's fine.
Yes, Darcy. One could come in here and say, you know what? I want to flip this thing, but I don't want to calculate all this stuff. How can I flip this to the bearish side where the price is stacked under the 8? And the 8 is under the 20, and the 20 is under the 50. He would simply open it up. Well, the wise thing to do first would be to duplicate the window. So you have a working copy. And then, yes, you are correct. We are in a bull market, so this is the kind of stuff we're looking for. At some point, the bull market's going to end, and we can take a lot of these scans that work and we can flip them just like that. And all of a sudden, look at that. We've got a completely different list of stocks that are under pressure, being pressured from above of their moving averages. And it's nothing I want to look at now because there's probably nothing really fruitful in here, the way the market is. But it's a great question, Darcy, and I did want to demonstrate to the group how easy it is to flip a bullish indicator or flip a bearish indicator into a bullish. That's basically what I did with the horseshoes. The horseshoe up and the horseshoe down are just basically flipped. Same version, just flipped. All right, we got a couple minutes. Let's do 3 charts. If anybody has 3 charts they want us to look at, it's always kind of nice to end on those. Yeah, oh, look at them, they were waiting. Okay, we got one more room for one more. All right, now we're done. Sorry. All right. We'll do as best we can. The first one was V-Ray. It looked kind of like what we were just sampling, doesn't it? Except the price isn't near its 10-day breakout. I like V-Ray. This thing is making higher lows as we go. It seems to consolidate, flag, and then push. And hopefully, Christopher, it's doing the same thing here, consolidating and then flag and possibly push. Now, the last 8 or 9 days here, it's just kind of a hodgepodge. There was a fake breakout, which I don't like. Right there, had a chance to run, but it pulled back. It did not sell off either, so it's just kind of waiting for maybe biding its time. Whether you're not long or you are, probably would be a wise thing to do to put an alert in there above that wick where it failed last time. But a good-looking chart nonetheless. Caterpillar had a really nice close today, as we can see. And look at this. It's kind of a long, protruded horseshoe. Here's the gap up. Here's the attempt to fill the gap. The gap was never filled. That's the important thing. The gap was never filled in Caterpillar. So all the bears, all the short sellers that were waiting for this gap to close, they're not getting their wish. It's starting to go the opposite direction. And so it will be a bona fide horseshoe pattern if it does turn around and break through this initial high. So Cat obviously had decent earnings, and then they've been digesting those earnings shortly. Unable to fill the gap like IBM did, I might add. IBM filled its gap perfectly after its earnings and is turning and heading higher. But the question is about Caterpillar. The fact that it did not fill its gap can mean more momentum and more strength to it on the upside. So I would basically just mark up that high back here and look at this as a fractal horseshoe pattern. The horseshoe pattern, if you're not familiar, here's the one I had today on an intraday pattern. Here's our gap up. Here's our failure to close the gap. And then as we run to brand new highs, even on the intraday charts, it has some nice follow through. So that's a fractal pattern that can show up on the intraday, as well as Cat is showing a very long, protracted, possible horseshoe. Okay, last one. I think it's Marvell, right, Andy? Is that what we're looking at?
Next one.
Ooh, Marvell. This thing's looking tricky. Well, we talked last week, I think, about the other side of the mountain. This thing definitely had its move, and now it's just trying to digest its move. Obviously, a nice move off of earnings or whatever that news was here with the tight range, and then volume 2 days in a row, and the third day it petered out. So it's just kind of working off, that giant 3-day move. I don't really know what to say with it at this point because it's just kind of working off its no man's land unless you see something that I don't. Andy?
No, that's a chart that looks like it may have gotten a little bit ahead of itself. You would like to have seen it go higher from that point. It may want to retrace some more, and who knows to where. But that's
keep an eye on it. Yeah, keep an eye on it. The downside risk, though, is that it may be broken. But I'm not going to say that this time because this isn't one of those $2 stocks that just went from $2 to $8 in 30 minutes. This looks like it's trending pretty nicely.
And it's a semi. So
it's a semiconductor. And we can also call this a horseshoe. Nice gap up after earnings, not even a glimmer of hope of filling the gap all the way down here. And then you can see once the short sellers realized that gap wasn't going to be filled, look at what happened. So it may just be kind of in pause mode for the time being. We'll see. We'll do one more because I feel bad because a lot of you guys stuck a lot of stuff in there. Con had a nice close today, obviously. What is this? What is the sector of this one? Real estate. Retail, okay, which we didn't really get to and I wanted to, but just a quick shot. Today was all about banks, regional banks, national banks. Forget UNG, that's natural gas. You don't care about that. Retail, and there you go. Nice day in retail, nice day in financial, nice day in home builders. So there was your really, really hot, green, solid strength showing us that the baton was indeed passed today to the banks and the retail and the financials, which is the reason, going back to hour one, why the Qs just didn't quite have the day that a lot of the other ones had. But back to the question at hand, con, this has been a very long, protracted, it almost reminds me of kind of the IWM, the way the IWM just kept doing that, right?
Mm-hmm.
So it's kind of a tough one.
It did finally come back and test that breakout, which is kind of gives you an easy, an easy risk parameter there if it comes back and crashes.
So if you did want to play with this, and you do believe that the stock wants to go higher, there's a pretty easy cutoff. Downside risk management is going to be right there, about 28.45. Yeah.
Mm-hmm.
All right. This one I can't add to the cloud, but let me just tell you guys something how simple this is. Okay, I'll add the top list to the cloud, but it's up to you guys to fill in what goes in there, and we'll end the webinar by showing you the second step that needs to be done. So I'm typing in sector top list, but all that's going to give you is the scaffolding of what it is. The real nuts and bolts are the 28 ETFs that we have in here. As you can see, the description of the ETFs. And the way in which that's done is a two-step process. Step one is you need to go to Tools, Symbol List, and you need to create a watch list. So create a new list and call that list ETF and hit OK. It'll be an empty list, but at some point that empty list will turn into 28 or 29 or so ETFs. That's step one, is building the identified symbol list and giving it a name. Step two is enabling it inside the configuration. The configuration, right here, we have a symbol list tab. This is where you need to go and find, add existing list. There it is, ETF, click ETF, pops over here, checkbox it, and you are good to go. It's only pulling from the following list ETF. So I'll leave that second step up to you guys as to what ETFs you want to put in there. But basically, it's just an easy way of keeping track of a change from yesterday's close. I could even look at the last 20 days. Banks have been killing it for the last 20 days. So that's where the strength's been. Oops, I didn't do that right.
Darcy, yeah, we do have a copy of this on our PDF of cloud links. We have so if you just email us to info@trade-ideas.com,
you can send that to you.
Yeah, tell them, yeah, we'll send it to you.
And that goes for anybody.
Want the PDF cloud links.
And that goes for anybody.
Mm-hmm. Anybody.
Okay. Back to con, I think we established that the downside was pretty much the only thing we can do from here. It's just really taking its time and doing what it seems to want to be doing. So with that said, hello Scott, got your ears on, top of the hour. Let's go ahead and bring you back in on the slides.
Yeah, thank you.
Whenever you're ready.
Just a couple items on the way out. Before we get to the code that I promised you, first I want to make sure everyone is subscribing to our podcast. Just go to your favorite podcast app, whatever you use to listen to podcasts in, and search for Trade Ideas Podcast. It should come right up. Just subscribe to it, add it to your stream, and listen to the new one. We're going to have a new one this coming Friday. We didn't have any past Friday because of the Thanksgiving holiday, but we've got previous ones before that, so do check those out as well in the archives. Good stuff and some good insight coming from us, thought leaders in the industry every Friday, so check it out. So there is a code. It's good this month. Do use the code Alpha Trades, all caps. This case sensitive, to save 15% off your first month or year if you missed the big sale for Thanksgiving. It saves 15% off your standard or premium subscription. Remember, any subscription with Trade Ideas includes a full hour of one-on-one training. That also includes the standard subscriptions. So even if you're just getting a monthly standard subscription, it does come with our power training. So do take advantage of that after you sign up and have attended some of our webinars and the trading room. and watch some videos and have some questions, go to the support section, sign up for that training, and get that. So if you want to download this code and some other information, just expand your handouts panel on your GoToWebinar interface. It is like a little arrow that you click on, it expands, and then there will be a blue link in there to download a PDF. You can grab that. It includes this code and some contact information. Like if you have any questions, email us info@trade-ideas.com. That goes directly into our help desk. You can also reach out to Steve or Andy directly by emailing steve@ or andy@ Trade Ideas. Follow us on Facebook and Twitter. Steve Gomez is Today Trader on Twitter. Dan Merkins to Trade Ideas 1. Facebook.com/Trade Ideas Pros. How to find us on Facebook. If you like that page, you can share stuff we post with your friends and get some event news. Thanks, Steve. Thanks, Andy.
Hey, thanks, guys.
Thanks, everybody.
Thanks, everyone.
Thanks, everyone.
See you next time.
Up later on tonight. Bye, guys.